Okay. What's up, everybody? Will Frazier here, your credit expert, bringing you the tips you need to get your credit back on track because what goes down must come up. And if you don't want your credit score to drop 300 points, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this. And yes, today we're going to be talking about what you need to do to get a house, even if you don't have any credit, zero credit score, anything like that. We're going to be talking about that today, and you'll be able to ask me questions on any questions you have dealing with credit. But first, this commercial. Hey, if you missed my live credit score boost training, don't worry, I got you. If you click the boost training link below, you'll be able to take part in that live training. Now, this training is for those of you that work long, hard days, and then you come home and you struggle trying to figure out what you're supposed to be doing to fix your credit. You don't know what to pay off and what not to pay off, what to dispute and what not to dispute, and you definitely don't know what you did wrong to make your score drop instead of increase. Now, what you'll learn by taking part in the training is my account identification process, which has saved my customers on average about $5,000 by not paying off accounts that would actually drop your credit score. I'm also going to share with you some accounts that have guaranteed approval, so you don't have to worry about if you'll get approved or denied, and these same accounts have helped my clients on average gain about 30 to 80 points. I'm also going to share with you my dispute process that I use that has given me an average account removal rate of about 13 accounts over a 90-day period. And not to mention, those of you that stay all the way to the end of the training, you're going to get a free gift which will help you with your credit disputing process. So if you're tired of going around in circles with your credit trying to figure out what to do, go ahead and click the link below for the boost training. I'll see you there. Okay, everybody, thank you for sticking around. I see a few people have entered. Make sure you go ahead and share this video in case you think anybody else that you know may need this information, whether it be on Facebook, Twitter, wherever you share the video at. Feel free to go ahead and help some other people out that may need this useful information. And again, we're going to be going over what you need to do if you are in a situation where you have zero credit, no credit score, and you're trying to get a house. And again, you guys will have the opportunity to ask me any credit questions that you may have. So make sure you do stick around to be able to ask any questions that you may have had lingering around on your mind, so that you don't have to wonder if you have the right info. You can get a good answer hopefully today. And let me see. Okay, I see a few people in the chat. Thank you guys for joining early. And I know it's a Friday evening. I know you guys probably have maybe some things planned later on, so I'm not going to keep y'all too long, but just enough to give you guys the information that you need and hopefully get you on track with your credit. Now, as far as the commercial that you just saw, if you guys are interested in that boost training, remember, it is free. The link to it is in the description, and you can get some free information if you are a person that works on other people's credit, or if you work on your credit and you just need some extra insight. Make sure you're doing the right thing. You can get that from the free training. But also, just to let you guys know before I get started, I am having a flash sale today. Yesterday, I had a flash sale on my best course, the Boost Method course. And that course usually is about $300. But yesterday, I had a flash sale on it. And I had a few people ask me to extend it because today, of course, it's payday. So if you guys are interested in that flash sale, it's only lasting 24 hours. So make sure you go ahead, check that out. It's in the link below, and you can take advantage of that today before it goes back to the regular price. So you can check that out in the description. Now, when it comes down to trying to get a house, those of you guys that have absolutely no credit at all, you haven't done anything to build credit, and this may apply to some of you who may also have just bad credit and you need to build credit as well. But for those of you that are looking to try to get a house, there are a few things that you need to know if you don't have any credit. And the reason why I'm talking about this today and why I went live for it is because I had somebody reach out to me. They did a consultation with me where I looked at their credit, and they were trying to see what they would need to do to get into a better place to try to get a house. Now, this individual, they had already applied for the house, and they had actually gotten a denial. So they were unable to get the house. And the reason why they were unable to get the house was because, well, before I tell you that, let me tell you what I saw on the credit report. I looked at the credit and I immediately noticed that they had a 700 something score, and it was 700 something on all three credit bureaus. So with that being said, of course, you would assume, there should be no problem with this person getting a house. But that goes to show you something that I tell people all the time. You can't just be concerned about the credit score. You have to think about the things that are on your credit report, because that's what determines what your score is going to be. But even though you may have a high credit score, again, it doesn't mean that you can get approved for everything, because there are other factors that could come into play and cause you to get a denial. So like I said, this person, they had a 700 score, all three bureaus, but the thing that they had that was the issue was they actually had a thin credit file, meaning this person hadn't built up enough credit. Now, interesting enough, they're at a 700 score. So this person actually had one credit card, and they had that credit card for almost a year, and they were at a 700 score, which of course, like I said, is great, but there are still other factors that go into getting approved, because again, especially when you're trying to get a house, you got to think about it. Most lenders, when you're getting a house, on an average scale of that, you're trying to get something around 100,000, depending on where you live. At minimum, you may have to pay, 300,000 or more than that, in some high cost as far as real estate areas. So, it really depends on where you're at and, what you're trying to get. But even if a person is trying to get something on the lower end, like $40,000, $50,000, maybe for an investment home or something like that, that is still a lot of money that the lender is giving you. So they want to make sure that they have some type of reliability. They can see reliability from you as far as you being able to pay people back in order to actually feel comfortable extending you that amount of money. So when you're looking at that and seeing the situation where this person has the thin credit file with a 700 score, you have to, look at it as that number can be inflated, because just because a person pays one account on time doesn't necessarily mean that when I give them this $40,000, they're going to do that. With most credit cards, especially when you first got your first one, your first credit card, you may be having a credit limit of about $500 or maybe less than that. So that doesn't really tell them how likely you are to pay back $40,000, or even worse, $100,000 to $300,000. So all that being said, when you don't have any credit and you're trying to get a house, you definitely have to have more than one account. That's, we're going to start with that. You have to have more than one account on your credit report to start building up credit in order to be able to have a better track record on your credit report and show that you can pay stuff on time. And in regards to that, what is usually advisable, or at least what I would advise to people, is to have at least maybe 3 credit cards on your credit report. So with that being said, having 3 credit cards, and when it comes down to what type of accounts to use to start building credit, credit cards usually help your score better more immediately than a loan would. Now, that's not to say that loans on your credit are just a bad thing, but credit cards show up as money available to you. Loans show up as debt that you have. So just because of that, that tells you right there that because 30% of your credit score is calculated by the amounts that you owe or your debt, that tells you that the credit card should, as I just mentioned, help you more than a loan would, especially initially when it first hit your credit report. Now, when it comes down to a loan, if you've never had a loan on your credit report before, or you don't have any active loans on your credit report, getting a loan will actually help you as well. So, with that being said, actually, if you are just if you're at the beginning of your credit building journey and you don't have a credit score, or you don't really have a lot of accounts, getting a loan would be something to help you out too, because there's also something, 10% of your score, which is the mix of your credit, which says that, having different types of accounts will actually help increase your score as well. So having different types of accounts, as well as having an account that shows up with very little debt to you, are both things that can help you out in the beginning of your credit building journey. So that being said, all credit cards are not easy to get when you are especially getting started. Some places will deny you because you don't have a credit card when you're trying to get a credit card, and that don't make any sense. It's just like if you're trying to get a job as a manager, but you have to have manager's experience before they'll give you a manager job. It's like, how are you going to ever, break into that with that being the requirement? So you have to try to go to places that will have either no credit check, or go to places that are going to have very relaxed requirements. Even if you go with a secured credit card, that doesn't guarantee that you're going to get approved, because with secured credit cards, you can still be denied. I used to work at Wells Fargo, and I would actually see people come in the door and get denied for a secure credit card where they're putting up their own money. And, it doesn't make sense. You should be able to get approved if you're putting up your own money and they have something to secure it. But, they still look at things on your credit report at most banks, and they can still deny you for that secured credit card. So the most important thing is no credit check, or if it's for bad credit. In some instances, there may be some unsecured cards that you may be able to get, but it may not be as high a number of them, or they may not be as easy for you to run across when you're trying to find things. But I'll recommend some things to you guys that'll actually help you out in both these areas, with the loans and with the credit cards. And if I don't have it linked in the description already, I'll add it by the time I'm done with the video. But all that being said, that tells you, the types of accounts that you can get to build up credit and how they will help you. But another important thing that you have to know is, how long will it take to actually get your first score if you don't have a score? Now, the first thing you have to do is you have to try to find your score somewhere. Now, one way to do this is to apply somewhere, but if you apply, you'll get an inquiry. So ideally, it would be good for you to try to find it on your own to try to avoid getting an inquiry. So if you pull your credit yourself from Credit Karma or a credit monitoring site, or freeannualcreditreport.com, you won't get an inquiry on your credit. But each of those has their pros and cons. With Credit Karma, you get a Vantage score. That thing could be anywhere from 20 points higher to 120 points higher than what your real score is. That is the score that a lender would actually pull when you go to apply for something. So you probably don't want to go there. Plus, you're not going to get the Experian credit report, and that is very important to see what that's going to be. When you go to apply for a house, they're going to look at all three of your credit reports and scores, and they're going to use an older version of FICO as well. So basically, Credit Karma isn't going to give you the best idea of where you're going to be at. If any of you have had the experience where you have looked at Credit Karma and you went to go apply for something, whether it be a house, a car, a credit card, and you saw a totally different number than what the lender told you, then I want you to comment, how much of a difference that score was when you saw it. Or, you could just say it was higher or lower. But in the comments, if you have went through that before, please say that in the comments so that everybody can get an idea of just how off, the Credit Karma scores can be. And now, in addition to that, you have the annual credit reports. With annual credit reports, you get them for free. I think you have to pay for one or two of the scores. If you actually want to see the credit score, I think they give you one of the credit scores for free, or you might be able to get two for free. But with those annual credit reports, they can be extremely long. I remember seeing one person's, one bureau, I think it was Equifax, their Equifax credit report was more than 100 pages just for that one credit report. And yeah, they're very detailed, and they do give you some useful information that you can only get. And I tell people to go get the annual reports in certain situations where we need certain dates. But for the most part, if one report is 100 pages and you got all three and you have to look through all of those and try to figure things out, it can get real complicated and it can be a little hard to decipher. So what I usually tell people to do is get some type of credit monitoring that gives you all three reports and scores, because it's just easier to read. You can get all the information, and ideally you want to get something that has FICO scores. I do have a link to a company that I use, and they have a $1 trial. If you just want to take a look at your reports, you can check them out in the description as well. But there are several different credit monitorings out there that do have your credit scores and FICO scores. But even the majority of the bureau scores, if you go directly to the bureau, you will get a Vantage credit score or a credit bureau specific credit score, and not necessarily FICO score. One of them does have the FICO scores, and there's also myfico.com, but they charge more than the others for those FICO scores. But all that being said, basically you want to find your score some way, and you want to see where you're at and get the closest idea to where your score may be. Now, if you pull something that gives you a Vantage score, and sometimes the score that you get with your credit card may be a Vantage score, if you pull your credit card, if you pull your credit score in a way like that, you may be getting a Vantage score. And when you get a Vantage score, even if you haven't built up credit history, you may still see a score. Let's say if you have like a collection account or something like that on your credit report. But if you pull a FICO score and you don't have any actual credit history built where you've used some type of account, then you actually see no score at all. So because you see no score, that's when a person says they have no credit. That's the equivalent to that. So you want to try to build up from that place of no score or a low score if you only have collections and you're looking at a Vantage score. So to come from that status of having no credit score at all, you have to use credit for a certain amount of time. It doesn't matter if it's a loan or a credit card, you have to use it for a certain amount of time. Now, the amount of time that you would have to use credit is really 6 months based on what they, say from FICO, but it's really, I would say, about 7 months, because it may be a 1 month delay from when you get that account and it hits your credit report. And then, after using it 6 months, then 7 months later, you may actually see that, or the reporting can just be delayed sometimes by a month. So you would, ideally want to wait about 7 months to see a credit score if you have none while you're trying to build up your credit. And then when you initially see a credit score, more than likely, if you don't have any other negative information on your credit report, you'll end up seeing something probably around the 600s, and it'll probably be a decent score. But at the same time, you'll have the problem that customer that I had, you'll have the same problem that customer had. It would be a thin credit file because you only have that one account reporting, or if you were that person that had a Vantage score that was low because you only have like a collection or something like that, then you would still see you would see an increase to your score, but it may not be as high because you have that negative information on your credit report. So basically that's how long it takes, about 7 months of using credit to actually build up a credit score. And you want to try to use credit cards and loans if you have not built any type of credit to try to help increase your file. Ideally, you would want to have about 3 accounts on your credit report. And you also need to make sure that you have some type of loan reporting on that credit report. And in some instances, there's an extra thing that you may want to look at that can help you in specific situations when you're trying to apply for credit. And that is the fact that basically some places they like to see, more so when you're trying to get a car, that you have had a loan of, a higher dollar amounts to see that you're capable of paying off loans of that size before you try to get, maybe bigger car loans or different things like that. So showing that you were able to pay back a loan of a higher amount can be something that can be beneficial to you, and it can help build up your credit as well. So those are pretty much the basic factors when it comes to trying to get your credit to a point where you can actually get a house. Now, you also have to know what the mortgage lenders want to see on your credit in order to make sure that you get approved. Because at the end of the day, it's, certain things out there. And even if you're coming from zero credit, or if you actually have some stuff on your credit, you just want to know what the goals are that you're reaching for with that lender. Now, you can call around to different mortgage lenders and, you can ask them what it is that they require, because you may hear different score requirements. One thing that used to be foundational was pretty much a 620 score was your way in the door to getting, at least like a FHA loan. And I'm talking about without going the lower score range, because they do let you go lower for FHA. It used to be about a 620. And now it is about a 660 middle score. And the middle score means they look at all three scores. They don't go with the highest number or the lowest number. They go with the number that's right in between, and that'll be your score that they use, your middle score. So you need to have a 660 with most lenders or better. Now, that means that at least two of your credit scores need to be 660 or better for you to have a middle score of 660. Also, you probably want your score to be a little bit higher than that, because every lender, they, like I said, because they may be using a different version of FICO than what you may be seeing at home. The numbers may be a little bit different. So it's a good idea to make sure that you're, slightly above the 660 to middle score to make sure that you are right where you need to be when you walk in the door. Also, keep in mind too that interest rates are starting to go up now. I know they were at one point the lowest that they've ever been, when they lowered them because of COVID, which was one good thing that came with COVID, but they're starting to rise up. So if you're trying to wait to get to 700 something just to get a mortgage loan, you might be better suited to just go ahead and pull the trigger now while the rates are already low. So all of that being said, that's the score that you want to be at. And also, if you have negative items on your credit report, you may want to take a look at that, take a deep look at that to try to see if you have collections, see if you have charge-offs, see if you have late payments, because all of those things can get in the way of your score being where it needs to be in order to get the house. And when it comes to certain items, certain lenders may overlook certain items, like charge-offs, for instance. And, just so you know, a charge-off is anything that shows the original creditor on your credit report. It could be a repo that's considered a charge-off. It could be an old credit card that can be considered a charge-off. It could be just anything that shows the original creditor on your credit report that may have closed out and went bad. So you have to ask the mortgage lender how they treat it, whichever one you call. You don't have to go directly to your bank. You don't have to go directly to a credit union to get a loan. You can go to a mortgage lender, and you may find that more favorable, because sometimes the banks can want a even higher score than what the mortgage lender will require, and they may charge more fees too. So that's all things that you want to take into consideration while you are trying to go out there and get yourself a mortgage. And if this information has been helpful so far, please say something in the comments, give me a thumbs up or something, but make sure you also, like the video so YouTube can share this video with more people that are in need of this kind of information. So make sure you go ahead and like. It doesn't cost you anything to hit the like button for me. If you don't like it, you can hit the thumbs down too, but hopefully this is good information for you. But to kind of summarize before I give you guys some accounts that you can use to try to build up your credit, if that's in the realm of what you're trying to do. Basically, in summary, you want to, if you're trying to build credit, get loans and credit cards. If you have absolutely no credit, get loans and credit cards. Make sure also that you, and also just to remind you guys, you can ask me questions at the end. So if you have some questions, you could go ahead and start putting them in the comments, and I'll try to answer those for you guys. But if you are trying to build credit from scratch, you have absolutely no credit, you want to get an account and you want to use it for at least 7 months to make sure that you see a credit score. Secondly, you want to make sure that you have a place to view your credit score while you're building up the credit, so you can see what it is and where it is. And ideally, you want to have a FICO score that you're looking at, because the Vantage score can be way off. And make sure you have something that shows you all three bureaus and all three scores. And it's better to have monthly updates so you can see how things change month after month as well. But build credit for 7 months. Best type of accounts to use. You want to use credit cards, ideally. And if you haven't had any credit history, then you can use some loans too, because that can help add to the mix of credit, and it can help you build up a strong credit history as well of making payments on multiple accounts. It's also a good idea to have about 3 credit cards. I would recommend as a sweet spot. If you have more than that, it won't hurt you, but you just don't want to overdo it at any time, because with credit cards, a lot of times people get to overspending too. So 3 is the sweet spot. Won't hurt to go over that, but that would be a good number to have to show your reliability as far as paying things back and building up good credit history. Now, as far as accounts that you want to use to try to build up credit, if you need something that's going to help you when you have absolutely no score, or if you have an extremely low score, or especially if you have stuff like late payments, because like I said, those things can all affect you even with secured credit cards. Some good starter secure credit cards I've mentioned on the channel already will be things like the Navy Federal and Rewards card. There's a Discover It card. There's also Kickoff. They have a revolving type product that is actually has a high approval rate, and I'll link that in the bio, but they give you a $500 revolving line of credit that you can use with them for specific types of purchases. And that's one of those accounts that's an alternative type of credit, but it will help you build credit. There's also, like I said, small loans that you can get. Secured loans are things that you can get from your bank or a credit union, but with those, you want to make sure that they're hitting all 3 credit bureaus, and the accounts that I mentioned usually are going to report to all 3 bureaus, or at least 2, because like I said, you need to have at least 2 of your scores 660 or better. So if you have something that can at least help you with 2, that's the bare minimum that you want to go. And you can use, like I said, small secured loans, but also there are items like SeedFi. There's a place called Credit Strong that I've mentioned to you guys before. All of these things can help you build up credit. Some with low fees, very low fees, like SeedFi, and Credit Strong, they can help you build up with higher amounts of loan reporting on your credit. And with both of those, you are actually putting money towards a savings that you will actually be able to unlock at the end of paying it. So it's actually still a reward to you at the end. And those type of accounts can help you get started, especially because some of these that I mentioned are no credit check, or they are good with approving low credit scores. So it can help you really get started and start building that foundation. And then later on, you can get more of those accounts that you want to get. Because all these things are things to jumpstart you and get you in the door for this house that you're trying to get. But those are the type of accounts that you want to use. Again, I'll leave links to them down in the description of the video. And you guys, if you have any questions, I think I see one already. If you guys have any questions, make sure you leave those in the comments so I can get to you and answer whatever questions you may have. And this first question, let's see here. If I apply for a credit card and get approved, is it possible to remove the inquiry before the account is reported to the bureaus? I'm trying to avoid having hard inquiries on my account. Okay, so when it comes down to that, if you get approved for an account, it shows up on your credit report, and then you try to dispute the inquiry. Let's say you are successful in disputing that inquiry and you get it off of your credit report. What's going to happen is they're going to end up removing that account off your credit report. So you're trying to build up credit, and you need these accounts on your credit report to actually build credit. So that would actually hurt you to try to dispute the inquiry on that account, because then you'll have the whole account removed. Because essentially what you're saying is, by trying to have inquiry removed, you're really saying that you never applied for it, and it shouldn't, you shouldn't have an account for it if you never applied for it. So they're going to remove that entire account, and you would actually be shooting yourself in the foot. So that's not something that you would want to do. Now, when it comes down to inquiries, that's a whole nother topic anyway. But when it comes to them, they really don't affect your score as much as people think they do. They really are only like a few points what they cost you, and they really hurt you more if you apply for something and then you don't get the account. So, that being said, if you actually get an account, removing the inquiry isn't something that you want to try to do, because it won't really help you out in the long run. And I actually just did a video about inquiries. So I did that maybe last week or so, I think. So make sure you check out that video. It should be helpful in understanding inquiries. And, if you do want to try to remove them, how you should go about that in the best way. Now, does anybody else have any other questions when it pertains to credit or trying to get a house, while you guys have me here, I'm ready to answer whatever questions you may have. And also, if you need a more personal look at your specific situation or your, specific credit situation, there's a link in the description where you can actually set up a consultation. I'll look at all 3 of your credit reports and scores, and I can give you the best idea on what you need to do going forward to get into a better situation. So just know that that is there for you guys as well. And I don't see any other questions down there yet. I don't know if you guys are just thinking about what you have to say or what, but if you guys have any other questions, please, like I said, leave those in the comments. And also, if you guys are thinking about starting a credit repair company of your own, just know I also do coaching for that. And there's a link to more information on that down in the description. And don't forget about that flash sale that I told you guys about that's going on for 24 hours. I just extended it from yesterday because I had more requests to do so because today was payday. So go ahead and check that out if you want to get that. Like I said, you'll get all the information that you need to try to help improve someone else's credit or your credit. You get 93 dispute letters in there. You get information on building credit, on how to best approach disputing with the bureaus when it comes to collections, charge-offs, all of that stuff, and also sending disputes directly to the creditors and collection companies. All of that information is within the course, even, what to dispute, what not to dispute. And, different tactics are all in there. Plus, it's a growing course. And if you get it, you get lifetime access. So you'll be able to take part in all the information that I add to it. And I do have quite a few things that I'm going to be adding to that course. And I think I have another credit question here. Okay. My report contains charge-offs and they have expired. How can I remove them? So when you say they expired, what exactly do you mean by they expired? Are you talking about the 7-year reporting period? That stuff's supposed to fall off your credit after 7 years? Let me know if that's what you're referring to or if you're talking about something different. But if that is what you're talking about, what I can say is this. As far as the 7-year reporting period, if it is a charge off and it did not have any negative information on it, like let's say if it has a balance, past due balance on it, or you still owe a balance on it. If it doesn't have anything like that, if it doesn't have any current late payments on it, then you should not try to remove it off of your credit report. I know that may not sound like the right thing to do with that, because I run into a lot of people that try to remove charge-offs that actually aren't hurting their credit, and it can actually cause your credit score to drop. So how that works is, as charge-offs get older with no recent activity, they don't affect your score anymore. So if they aren't affecting your score because either they have zero balance and nothing past due and they're not adding late payments on your credit report, then it's not hurting your credit score. The only thing it's doing at that point is adding to the average age of your credit. So it's actually helping your score and it's not hurting it. So once you have something like that removed, then it can cause your credit score to drop. Well, the collection company advised me that the time has expired to collect. Okay, so that means the not the reporting period. It's actually I can't think of the name of it now, but it's not the reporting period. Oh, the statute of limitations. That's what it is. So they can't sue you for it. That's what that means. Now, the fact that they can't sue you for it, that just means that they can't sue you for it. If there is a balance there and it's not, showing up as past due, it's not showing late payments, it's still probably not affecting your score. So at that point, I would say that you could probably not really deal with that because it's outside of statute of limitations. Paying it at this point would actually hurt your score. So you probably, don't want to do that, especially if you're trying to get a house or do something else with your credit. Now, also make sure that it is a charge off and not a collection company. There is a difference If it's a third-party collection company, it affects you differently. If it's a charge-off showing the original creditor on your credit report, that's a different effect. So you have different steps that you need to take. So if it is a charge-off, don't worry about it. They can't sue you, and you probably don't want to pay it right now and affect your credit. And it could be close to falling off your credit, depending on what state you live in, because the statute of limitations can sometimes be close to the reporting period, and it could be about to fall off on its own. But if it's just an account that you paid off, which it sounds like it may not be, if it was an account that you paid off, you would want to just leave it there. But hopefully that answers your question. I love this thing. I came across your YouTube channel. I need your help. Okay. Well, if you need any help, I did let everybody know. The link is in the description to set up a consultation. If you need me to look at your credit report and actually see what's going on with your situation. But I am glad that you found the channel too. Hopefully you're finding this information to be useful. And you guys make sure that if it is useful, you hit the thumbs up so YouTube can share this with more people, and make sure you also share this video on your other social media so that other people can see this good information. I'm pretty sure somebody is trying to get a house, and this may be just the information that they needed to be able to get to that goal. Okay. Oh, you lost connection. Okay. So you had the question about applying for a credit card, getting approved, and then removing the inquiry. So I did answer your question, and what I said was you don't want to get the inquiry removed, because if you get approved for the account and then you actually are successful in having the inquiry removed, what you're telling them is you never applied for that account, so there shouldn't be an inquiry on your credit report. So if you didn't apply for that account, which is what you're telling them by disputing it, then they will remove that account as soon as they remove the inquiry, and you applied for the account to help your credit, but now it's going to be removed because you disputed the inquiry and got it off. So don't dispute it. Don't try to get it off. It wouldn't have helped you much anyway. With inquiries, people get like 2 to 5 points on average. So it probably wouldn't have made a big difference, and you would shoot yourself in the foot, because the account probably would have gave you a lot of points helping you to build credit, but then it just got removed because you disputed the inquiry. So I said, don't do that. You don't want to shoot yourself in the foot. Okay, if you want to try to reach out, you can try to reach out through the website. All of my contact information is on there, so you'll be able to go to the website. That website is www, and I'll put it up here for you actually. Hold on a second. So you can go to the website, and I believe that's showing now. Okay, yeah. So if you want to go to the website, you'll find all my contact information where you'll be able to reach out and set up a consultation. I can't even talk, or call in to get some more questions answered. But mind you, I won't be able to actually, give you the specific help that you need unless I look at your credit report, because it's just like taking your car to the mechanic. You can tell him what's going on, but he still has to look under the hood to really see how to specifically help what's going on with your car. Same thing with your credit. For me to give you specific, directions on what to do, I will have to look at your credit reports. But, if you have general questions and stuff like that, I can definitely try to help you out with that. All right, you're welcome. You're welcome. Most definitely. Okay, you talking about the shopping cart trick? Well, with the shopping cart trick, I know that's a different way. That's like having an account or applying for an account with no credit check. So basically, you get the account without getting the inquiry. Now, that's something totally different than disputing the inquiry after you get the account. So that, that affects you totally differently. But I do get that the shopping cart trick. I have seen that before, and that is something that is like a no credit check type situation, and you can get an account without getting an inquiry. So if you can do something like that, it would pay to do that, because you wouldn't get the inquiry. But other than that, you don't want to try to dispute inquiries for accounts, especially for accounts that you need on your credit report. All right. So hopefully I answered that question. Does anybody else have any questions out there? Any credit questions? Now, I haven't seen a whole bunch of questions, so that means everybody else up in the chat today or in the live today, y'all must already have the 730, 750 credit scores, maybe even 800 credit scores. So y'all don't need no questions answered, and that's great. That's a good place to be. So no arguments there. But if you guys have any questions, you're welcome, brother. Not a problem at all. But if you guys have any questions, feel free to go ahead and ask those. I'll, wait just a few more minutes just to try to see if anybody else was still in there typing up something in the chat, so I can make sure I get to that before I log off. But hopefully, you guys found this information useful. I don't know how soon you guys may be trying to get a house. If you guys are trying to get a house, put in the comments how far out you're trying to wait before you try to get your house, if you don't already have one. Because if you're trying to build up to get there, let's see. Need to get inquiries removed and one collection. Okay, so yeah, collections are definitely worth removing because they can cause a lot of damage to the credit score, and you can see some good benefits from removing those. Like, those you could see, 10 points, 20, 30 points just from having a collection removed, depending on, what your credit makeup looks like. But I can tell you the inquiries, like I said, you usually only get a little bit for those, and they're hard to deal with too. So yeah, you're probably better served working on collections and whatnot. But yeah, if you need the services too, like I said, feel free. I have a lot of do-it-yourself products just to help people get this done themselves if they want to try to. But I'm definitely here to help people that need help. And like I said, you can do a consultation with me. Just go to the link in the description, actually, and I have a direct link to set up a consultation. But if you need some more information, you can go to the website, and I have more contact information there. But let's see. Okay, I see you, Sharon. You're trying to get your house now. You just got to get the score where it needs to be. Well, like I said, depending on what's going on with your situation, this video, hopefully, if building credit was your only problem, then hopefully this video would help you. And if there are other things that you need, I have a lot of help products that can help you, and little trainings that I link under the videos. Plus, of course, like I said, you always have me. All right, yep, that's one of my goals. So I want to know, how fast can my credit improve before I can buy a home? Okay, yeah, your credit can turn around in as little as 30 days, depending on what your situation is. Because, if it's something as simple as just paying down your credit cards, or, maybe something else, some situations can be turned around really fast. Some, they take more time. It may take more steps. But, ideally, it would be great for everybody to have the most simple situation in regards to getting their credit straightened out. So hopefully, I hope people in those situations, when they come to me, so that they can get to their goal faster. But, I'm here to help with any way that I can to get people in the right direction. Because a lot of times when you don't really know what it is that you need to do, then, you can be going in circles for a while trying to figure out what to do. You may do the wrong things, and then it'll put you in reverse, and then you have to try to recover from that. So it's always best to get help from an expert so that you can get on the straightest path from A to Z. Okay, credit scores in the low 600s. Yeah, so you're not that far away, Cecilia. You're not that far away at all. You just need to get, depending on how far low in the sixes you are, you just need to get 2 of those scores to about a 660, and you'll be good to go. Maybe 670, just to be safe. But you're not too far to go. So based on what you told me, if that's a FICO score that you were looking at, you really don't have that far to go at all. So you should rest easy in that, knowing that you're very, very close. You're like very close to being at the door to reaching your goal. And okay, I'm not seeing any other questions. So I appreciate you guys for being here on the live with me. I really hope that this information was valuable and useful. And if you guys have any other specific topics you want me to cover and going live again, leave that in the comments. Also, if you guys would like to see me go live just to do Q&As, then let me know in the comments that you would like to see me go live just to do Q&As on a certain day, and then you can get all your credit questions answered on those days. Let me know down in the comments. All right, yeah, please go ahead and check the website out. Okay, 5:30. Okay, so because it's 5:30, I know it's some work that probably needs to be done. But once I take a look at your credit reports, I'll be able to see and identify what it is that's really affecting you, and then we can probably take it from there and get you on the right path. But even at 5:30, it's not too bad. The lowest the score can go is the 300s. So if you're not there, you definitely still have hope on getting to where you need to be. Okay, I got one yes on the Q&A already. So yeah, if I get a good bit more requests for those Q&As, I think I'll probably start doing those, because that might be really helpful. Okay, that's a question. That's a good question that I haven't heard anybody ask. Does an inherited house affect your credit score? So when it comes down to that, an inherited house, it should not affect your credit score, because when it comes down to how that should work, basically it's you have had ownership of the house passed down to you. You have not assumed the loan. The loan itself is tied to whoever actually applied for the house, and it's tied to their name. So you may be able to inherit it through, I forgot what it's called, but it's just basically part of the ownership, like tied to the deed, and ownership can be passed to you through that, and through your relationship to the person that actually owned the deed to the home. And that's why it wouldn't affect your credit necessarily, just inheriting a house like that. All right, yeah, please, everybody, make sure you hit like, subscribe, and turn on that bell notification so you'll be notified of any new videos I drop just like this. And then you can make sure that you catch all of the good information that I'm dropping. And I ask questions a lot of times to see what type of content you guys want, so you can put your 2 cents in on what type of content you want to see. All right, okay, I got a lot of y'all saying I need to go ahead and do the Q&A. So I'll try to plan for something like that, and see what day will be a good day. And then I try to go live, and you guys make sure you write down your questions and you come with it on those days, so that I can help get you guys on a fast track to better credit, because as you know, what goes down must come up, and that's what I'm here to help you guys with. And with that being said, I'm definitely about to wrap it up now, and I appreciate all you guys for being here and sticking with me to the end. And just real quick, I see another last minute question there. Does medical debt affect credit scores? Yes, it does. It definitely affects credit scores. It shows up as a collection on your credit report. So it does affect your credit score, and that's something that you would definitely want to try to deal with. That being said, thank you guys for checking in today. I'll see you guys next time I go live. Hopefully it'll be on a Q&A where you guys can ask me some more questions. If not, another topic that I feel like would be useful to you guys to hear and benefit in your credit. Now, you guys enjoy the rest of your evening, this Friday evening, and I'll see you guys next time.